Now the following news, let's see, is probably going to make the world markets want to rally, especially the American markets. The New York Stock Exchange is probably going to rally like hell tomorrow based on this news. Not. Dear clients, industry colleagues, and friends of Barnhardt Capital Management, it is with regret and unflinching moral certainty that I announce that Barnhardt Capital Management has ceased operations. After 6 years of operating as an independent introducing brokerage and 8 years of employment as a broker before that, I found myself this morning, for the first time since I was 20 years old, watching the futures and options market open, not as a participant, but as a mere speculator. The reason for my decision to pull the plug was excruciatingly simple. I could no longer tell my clients that their monies and positions were safe in the futures and options markets, because they are not. And this goes not just for my clients, but for every futures and options account in the United States. I'll even one up that. Over in the London, the LBMA, the whole 9 yards over there in London, it applies there too. The entire system has been utterly destroyed by the MF Global collapse. Given this sad reality, I could not, in good conscience, take one more step as a commodity broker, soliciting trades that I knew were unsafe or holding funds that I knew to be in jeopardy. The futures markets are very highly leveraged and thus require an exceptionally firm base upon which to function. That base was the sacrosanct segregation of customer funds from clearing firm capital with additional emergency financial backing provided by the exchanges themselves. Up until a few weeks ago, that base existed and had worked flawlessly. Firms came and went, with some imploding in spectacular fashion. Whenever a firm failure happened, the customer funds were intact and the exchanges would step in to backstop everything and keep customers 100% liquid, even as their clearing firm collapsed and was quickly replaced by another firm within the system. Everything changed just a few short weeks ago. A firm led by a crony of the Obama regime stole all of the non-margined cash held by customers of his firm. Let's not sugarcoat this or make this crime seem complex and abstract by drowning ourselves in $6 words and uber technical jargon. John Corzine stole the customer cash at MF Global. Knowing John Corzine and knowing the abject lawlessness and contempt for humanity of the Marxist Obama regime and its cronies, this is not really a surprise. What was a surprise was the reaction of the exchanges and the regulators. Their reaction has been to take a bad situation and make it orders of magnitude worse. Specifically, they froze customers out of their accounts while the markets continued to trade, refusing to even allow them to liquidate. This is unfathomable. The risk exposure precedent that has been set is completely intolerable and has destroyed the entire industry paradigm. No informed person can continue to engage these markets, and no moral person can continue to broker or facilitate customer engagement in what is now a massive game of Russian roulette. I have learned over this last week that MF Global is almost certainly the mere tip of the iceberg. There is massive industry-wide exposure to European sovereign junk debt. While other firms may not be as heavily leveraged as old Corzine had MF Global leveraged, and it is now thought that MF Global's leverage may have been in excess of 100 to 1, they are still suicidally leveraged. These other ones are still suicidally leveraged and will likely stand massive, unmeetable collateral calls in the coming days and weeks as Europe inevitably collapses. I now suspect that the reason the Chicago Mercantile Exchange, the CME, you guessed it, did not immediately step in to backstop the MF Global implosion was because they knew and know that if they backstop MF Global, they would then be expected to backstop all of the other firms in the system when the failures began to cascade. And there simply is not that much money in the entire system. In short, the problem is a systemic problem, not merely isolated to one single firm. You will recall the video I did, I think, first thing this morning, when I said JP Morgan and Goldman Sachs are heavily upside down, you could say, derivatives-wise, involved in the junk, as they just called it here, junk, bonds, government nonsense over in Europe. But we have protection, everybody. We have credit default swaps to protect of just the worst case scenario that those governments fail and the bonds fail and we lose. To the tune of trillions of dollars, you guys have that kind of backstopping. You think these insurance companies, AIG and all these other guys, have the funds sitting on standby in place to handle a catastrophic event like that? That would be like a hurricane going from the top or bottom to the top of the state of Florida, as wide as the state of Florida, ripping the entire state of Florida housing and cars, just utter destruction. And saying, oh, all these insurance companies that insured people in Florida, yeah, they'll survive. No, it would be utter devastation, and there would be multiple bankruptcies and closings of the insurance companies, and you'd make that old phone call, we're sorry, the number you called does not exist. They ran for their lives and closed down shop. Sorry, kiss off. Oh, wait a minute. But I've been paying these insurance premiums for years and years and years. And when housing prices skyrocketed, man, did they rape me with those insurance premiums. And man, when that little hurricane hit down, 200 miles south of me, my premium still went up and it didn't even come here. And I still had to pay higher premiums. And now I need insurance the most. Right now I need this. And I call and they're bankrupt. You don't suppose the federal government would step in and bail out that kind of thing, do you? No. Because that's not Wall Street. That's not John Corzine. That's not Goldman Sachs. That's not JP Morgan. They don't play that insurance game. State Farm, Allstate, Geico, whoever else, small time, medium size, whatever, they would be allowed to fail. They would fail. And you and I would be pissed off if it happened in our area. And you can't say, hey, well, I wasn't paying my insurance, or I deserved it because I was driving a car without insurance. Well, no, you're not living in a house without insurance. And you've been paying it the whole time, and just when you need it most, never fails, just when you need it the most, oh, that's not covered. Oh, they went bankrupt. Oh, whatever. Absolutely incredible. But JP Morgan Chase, the largest derivative holder, Goldman Sachs, Bank of America, all those guys, tens of trillions of dollars in derivatives contracts. It only takes one little chain on the long chain of derivatives contracts to bring down the whole stinking mess. And this little MF Global might be that chain. It could be that chain that causes destruction throughout the whole chain, if you will. So let me go ahead and continue reading this. Perhaps, and this is a letter they sent out to their clients, by the way. Perhaps the most ominous dynamic that I have yet heard of in regards to this mess is that of the risk of potential clawback actions. For those who do not know, clawback is the process by which a bankruptcy trustee is legally permitted to re-seize assets that left a bankrupt entity in the time period immediately preceding the entity's collapse. So, using the MF Global customers as an example, any funds that were withdrawn from MF Global accounts in the run-up to the collapse, the ones that they stole, either because of suspicions the customer may have had about MF Global from, say, watching the company's bond yields rise sharply, or from purely organic day-to-day withdrawals, the bankruptcy trustee could initiate action to claw back those funds. As a hedge broker, this makes my blood run cold. Generally, as the markets move in favor of a hedge position and equity builds in a client's account, that excess liquidity is sent back to the customer, who then uses that equity to offset cash market transactions or pay down a revolving line of credit. Even the possibility that a customer could be penalized and additionally raped again via a clawback action after already having their customer funds stolen is simply villainous. While there has been no open indication of clawback actions yet being initiated by the MF Global trustee, I have been told that it is a possibility. And so, to the very unpleasant crux of the matter, the futures and options markets are no longer viable. It is my recommendation that all customers withdraw from all of the markets as soon as possible so that they have the best chance of protecting themselves and their equity. The system is no longer functioning with integrity and is suicidally risk-laden. I'm going to add something there. I don't think it was just no longer functioning with integrity like recently. I don't think it was functioning with integrity for quite some time now. But that's okay. The rule of law is non-existent. Well, we already can tell that. Has John Corzine gone to jail yet? Bernie Madoff. Ponzi scheme, but Bernie Madoff was not a member of the club. He was just some guy. He was the competition to the club, actually. So, no. Nuh-uh. Nope.
It's your night.
Go ahead.
And
right in the middle of the video. Close the door. Now. Unbelievable. Rule number 1. When I'm in here doing a video, you already know, don't bother me. The kids can't come in here because I don't want to have to edit this, stop it, redo it. I don't want to do that. You know the rules. So who opens the door? One of the kids? No. The wife opens the door. The one who we had the discussion, don't come in when I'm doing this. You win some, you lose some. And I think I just lost. So, the rule of law is non-existent. Instead, replaced with godless, criminal, political cronyism. Remember, derivatives contracts are not necessarily in the commodities markets. The cash commodity itself is the underlying reality and is not dependent on the futures or options markets. Many people seem to have gotten that backwards over the past decades. From Abel, the animal husbandman, up until the year 1964, there were no cattle futures contracts at all, and no options contracts until 1984. And yet the cash cattle markets got along just fine. Finally, I will not, under any circumstances, consider reforming and reopening Barnhardt Capital Management or any other iteration of a brokerage business until Barack Obama has been removed from office and the government of the United States has been sufficiently reformed and repopulated so as to engender my total and complete confidence in the government, its adherence to and enforcement of the rule of law, and in its competent and just regulatory oversight of any commodities markets that may reform. So long as the government remains criminal, it would serve no purpose whatsoever to attempt to rebuild the futures industry or my firm, because in a lawless environment, the same thievery and fraud would simply happen again, and the criminals would go unpunished, sheltered by the criminal oligarchy. There's that word again. Oligarchy. Where did that come from? What is she talking about? We live in a democracy. Excuse me, what was her name again? Miss Ann Barnhardt. Don't you know we're in a democracy? A two-party oligarchy? A two-party dictatorship, actually? She called it right. It's an oligarchy. You've never heard that word in your life in schools. Never. Because we're all taught about democracies. And we got to go get rid of these dictators in the Middle East so we can give them democracy. Which means oligarchy. Controlled by the oligarchs over here. Incredible. She finishes up by saying, to my clients who literally, to the man, agreed with my assessment of the situation and were relieved to be exiting the markets, and many whom I now suspect stayed in the markets as long as they did only out of personal loyalty to me, I can only say thank you for the honor and pleasure of serving you over these last years, with some of my clients having been with me for over 12 years. I will continue to blog at barnhardt.biz, which will be subtly reskinned soon, and will continue my cattle marketing consultation business. I will still be here in the office answering my phones with the same phone numbers. Alas, my retirement came a few years earlier than I had anticipated, but there was no possible way to continue, given the inevitability of the collapse of the global financial markets, the overthrow of our government, and the resulting collapse in the rule of law. As for me, I can only echo the words of David. This is the Lord's doing, and it is wonderful in our eyes. With best regards, Ann Barnhardt. One of the players in the game that handles customers' money is telling the customers, we could rape you right now, like everybody else. We could lose your money in these markets just so that we could make money, like everybody else. We don't have the heart to do so. We are genuine human beings here, who do care about our clients. So rather than pretend we didn't know, we didn't see this coming, it was unexpected, and play that fake game, they decided we're closing down shop. Everybody, take your money out of the system. We'll help you in our accounts. We'll get it back to you. We're good to go. We're now closing the doors. Stay on the sidelines. Do not get back in that paper game. Now, it would have been nice if she finished this by saying, thanks to the commodities crashing down right now, go and load the boat with your money that you just got out of these accounts and go buy gold and silver out of control. Physical. But I think she did a pretty good job with that little letter she sent out anyways. So I wanted to share that with you and ask you, how do you think the markets are going to start responding soon? Is there going to be like this gigantic rally coming? Am I missing something? And even if QE3, quantitative easing, kicked in, just with all the bad news in Europe, man, could it really do something to offset all this from happening? Oh, Dow rose 400 points today. Gold and silver are back up, 10%. Oh, my God. Sure, it could happen. But it's almost like taking that shot, that heroin shot or whatever, that drug. Lasts a long time at first. Then it gets shorter, shorter, shorter. I need more, I need more. Next thing you know, you're shooting up, taking out, putting it right back in. Wow, that was fast. That's kind of what I think quantitative easing might do if they even unleashed it here shortly. It would last for a little short period of time. Great, great. Everyone's buying again. Oh, fantastic. And then it would fizzle. At the same time, due to the crisis in Europe, due to MF Global collapsing and causing a chain of events, so to speak, behind the scenes that none of us are actually being told about, that we already know because you can tell by looking at the bond auctions in Europe to know what's going down, would QE3 even matter right now? Maybe they're going to let the whole stinking mess collapse, including letting the euro break apart, the markets just go haywire, down, collapse, and then we could see QE3 to start off from the bottom again. Hey, yeah, all right. Glory to Ben Bernanke. Start old QE3 for us, buddy. After the crash. It could happen that way. Doesn't matter if you're sitting on physical silver and gold, one way or the other. It's going to go up in value. How soon? It's anyone's guess right now. But I don't have to wait 20 years and wonder, I wonder where I'm going to be in 20 years. I'm looking at 2, 3, 4, 5 years max of when everything I'm expecting, the huge numbers in gold and silver, to already be in our face. That's not a long time, by the way. So I wanted to share that with you, and I'm now going to end this video. And just can't wait to see what other news comes this week. Tomorrow's Friday. Next week, the 22nd, options expiration. The 23rd, the committee of 12 bozos in Congress have to come up with deficit cuts. And can you imagine if they can't come to an agreement and the default cuts kick in? Ooh. You want to talk about the triggering event of a market collapse? It could happen just like that. And yeah, gold and silver would come smacking down pretty quick. And old Jay Snip would be running to his safe, pull out that cash real quick, put it in the bank so I can immediately go on the computer and make a purchase online. Or I could possibly just go straight down to old Gainesville Coins and give him the cash there. Either way. So, I'll keep you informed. Take care. That's all I got for you. The collapse is looking like it is getting closer and closer. The big one anyways. So, stay tuned.